Alphabet just crushed earnings. Markets are climbing for a third straight day. And there's, of course, news on tariffs. What does it all mean for your portfolio? We're breaking it all down in today's episode. Plus, we'll touch on a big move by the Trump administration around self-driving cars, give you a sneak peek at tomorrow's economic calendar, and kick off our intro into value investing. What is it, and why does it still matter in 2025? Don't forget to like and subscribe and follow wherever you listen to podcasts. Now, let's dive in. Welcome back to Stockcast, the market show for the average Joe. Whether you're a diamond-handed degenerate looking for the next 500% play or a more conservative swing trader or investor, we've got you covered. We tackle the latest market news, give our 2 cents, and maybe, just maybe, help you make some money along the way. I'm your host, as always, Brandon Shar. Happy Thursday, everyone. The markets are green, green, green. Let's jump right into it. So according to CNBC, markets are up for a third straight day. S&P 500, NASDAQ close higher as investors continue to look for signs of progress on the global trade front. S&P 500 ended up just above 2%, while the tech-heavy NASDAQ added 2.74%. The Dow Jones lagged the other two indexes, weighed down by a 6.6% drop in IBM. But even so, managed to close above 40,000. This marked the blue chip index's first close above the 40,000 threshold since April 15th. So that's good news. Me personally, I don't follow the Dow Jones as closely as I do the S&P or the NASDAQ. I think it's a bit outdated, I would say, in my personal opinion. It follows, 30 stocks, blue chip stocks, right? But I think the S&P 500 is a better gauge of the market. But overall, you get the idea. Everything's up. Shares of Nvidia, Meta, Amazon, Tesla, and Microsoft all closed higher, propelling the major averages to their third day of gains in a row. Tech has been rocked recently as the White House is increasingly confrontational trade stance, particularly against China. Well, I can't talk today. Dense sentiment on the sector. So everything's up, which is great. Let's take a look at the heat map. A lot of green across the board. There's a little bit of red here and there, but overall, everything's up, which is great. Let's take a look at some of the charts here. Take a look at SPY. We're putting in higher lows, which is always a good thing. Yeah, we had the death cross a few days back, which is one of the most bearish signals you can get. So that's not great. But overall, we're looking pretty good in the short term. Things are moving up, which is awesome. Same with the Qs, looking good. Checking on small cap stocks via IWM, and that's also looking good. We're getting close here on IWM, trying to close above the high of yesterday. Didn't quite get there today. Would have loved to see that, but let's see tomorrow if we can close above 195.51. So that's what I'd be looking at on IWM. But overall, everything's looking up right now, which is great. I mean, if you take a look over here off to the left-hand side, I have all the different, sectors laid out here. Everything was green today, with the exception of consumer staples, which were down a little bit. Let's do a quick check-in on the VIX. This is the volatility gauge in the market. We had that insane spike up to 60 a couple weeks back, and it's been coming down, which is great. As I mentioned before, would love to see this get below 20. I don't know if we're going to get that anytime soon, but it's awesome to see it back down below 30 at least. Hey, I'll take what I can get. So that's where we're at as far as the markets. And one of the things that really drove a lot of bullish sentiment was the anticipation for Alphabet, the parent company for Google, coming out with earnings for Q1 of 2025, which they did after the bell today, so just a little bit ago actually. Alphabet reported revenue of $90.23 billion and earnings per share of $2.81, which they actually beat expectations there, which is always a great thing. The company's shares rose as much as 4% on stronger than expected revenue growth. Alphabet search and advertising units are still showing strong growth despite AI competition heating up, according to its first quarter earnings report. So let's just take a quick check in here at some of the numbers that they dropped, right? So Alphabet, the parent company of Google and YouTube, reported stronger than expected first quarter growth on Thursday after the bell. Revenue, $90.23 billion versus $89.12 billion estimate. Earnings per share, 2.1 versus, just a little over $2. So another beat there. Wall Street is also watching several other numbers in the report, such as YouTube advertising revenue. 8.93 billion versus 8.97 billion according to Street Account. Google Cloud revenue came in about as expected. Traffic acquisition costs 13.75 billion versus 13.66. So they had a great report. I mean, that's basically it. Alphabet's search and advertising units are still showing strong growth despite AI competition heating up, which is, it's a good thing. I mean, look, Alphabet is part of the Magnificent Seven. It's one of the largest companies that we have in the stock market. And so because of that, it is a key driver in the overall, stock market picture. So anytime you have a Magnificent Seven stock that is reporting, definitely want to pay attention, and you definitely want to see a good report. So, they came out with their earnings. It looks good. As far as guidance, I really didn't see anything, because here's the thing. Everyone's reporting earnings. Things look good in the past, which I've said before, but everyone's a little nervous given the current environment with tariffs and, what guidance is going to look like moving forward. I didn't see anything in particular here as far as guidance, so I'll have to check that out. But if anybody found anything on that, make sure to drop it in a comment. But as far as their earnings go, it looks great. It looks great. So the markets definitely love that. Let's take a look here at some of the latest tariff news. So, according to Yahoo Finance, Trump tariff live updates. Trump and China at odds, surprise, surprise, on progress as percent hints at quick deal with South Korea. So Treasury Secretary Scott Bessent hinted that the U.S. and South Korea could reach a trade agreement as early as next week, telling reporters in the Oval Office Thursday, "We may be moving faster than I thought. They came in with their A game." Well, we love when a country brings their A game. However, while negotiations with South Korea progressed, the U.S. and China continue to be at odds after China rebuffed U.S. trade overtures Thursday, demanding all tariffs be lifted and denying any progress in talks. I think a lot of traders, a lot of investors are confused, rightfully so. We had some reports earlier today that from Trump himself, that basically there were talks going on with China, and China came out and said, no, that's not a thing, that's not happening. So who knows who to believe at this point? And according to the Commerce Ministry spokesman for China, he said, quote, "The U.S. should thoroughly remove all unilateral tariffs if it really wants to solve the problem." And calling reports on ongoing negotiations, quote, "groundless." So that doesn't really sound like a response from a country that's supposedly talking to us. So I'm a bit skeptical, if I'm being honest. President Trump claimed that his administration was talking with Beijing, even as he declined to specify who took part in negotiations. He said, "It doesn't matter who they is. We may reveal it later, but they had meetings this morning, and we've been meeting with China," Trump said at the White House. So, not giving a lot of clarity as to who they talked to, but supposedly, at least according to the President of the United States, they have been talking to somebody in China. So that's where we're at right now with tariffs. So still no concrete deals put in yet, right? There's a ton of countries at the table, supposedly, but we have not had any deals inked yet. Sounds like, based off of what we heard from Percent, South Korea very well might be the first one. But as far as the deal with China, which I think is probably what the market cares about the most right now, given these are the two largest economies in the world, we're having conflicting reports. Are they talking? Are they not talking? I don't know. I don't know. But I think the markets did get a bit of a lift today from just, the mention, even the mention that, hey, China's on the other end of the line and Trump is talking to somebody over there. So we'll see what comes of it. We only got 1 day left in the trading week. I really don't expect a whole lot of clarity, at least as it pertains to tariffs, to come out in the next 24 hours. But hey, we've seen crazier things over the past month, so who knows? I did find an interesting article from CNBC on this whole China US tariff situation, and really who's gonna give in, who's gonna cave in first. Really, that's what we're looking at here. The US and China, according to this article, may exchange some information at the working level, but that's not negotiations, right? That's what this article said from China's foreign ministry and a professor at Fudan University in Shanghai. He basically is just saying, look, there may be some information exchanged at a working level. It's not negotiations, which I guess is true. Trump just wants to send some reassuring signals to the domestic market, suggesting that the Chinese are talking to us. Don't worry, but that's not the case. That's what this guy said. So, in the meantime, China faces its own pressures, including a slowdown in its export-driven economy that would only be made worse by tariffs. If domestic demand doesn't pick up to compensate for the drop in exports, China may need to negotiate. So that's what a senior economist said. That's kind of interesting, and I guess I get that. Look, China exports a ton of stuff. We account for 20% of their exports. And so if those exports aren't coming to the US, where are they going to go? You can only send out so much stuff to other parts of the world. When you lose your biggest customer, being the US, one of the largest, economies in the world, that's going to hurt. So other factors, such as the fact that Chinese President Xi Jinping doesn't have to answer to voters, may buy China some time. So this was an interesting point as well that this article made, which was that simply there's a lot of political pressure on Trump to get a deal done, right? The same pressure does not apply to China's president. It's a communist regime, so he doesn't have to worry about that in the same way that Trump does. For Trump, midterms are going to be here before he knows it, and he knows it. So he's, I'm sure, very keen on getting deals inked. So it's a very tricky environment. A lot of investors are kind of sitting on the sideline waiting to see how this is all going to shake out. As of right now, we still don't have answers, but I believe that we are closer to answers than not closer, I guess, if that makes sense. We're on a ticking clock right now, basically, with these tariffs in place. Exports not coming to the US is putting pressure on China. The more time that goes by, the more pressure politically gets put on Trump. And so I think pressure from both sides, respectively, will push them to the negotiation table. It's only a matter of time. I don't want to put a timetable on it. I guess it'd be kind of fun to do that. You know what? I'm going to say that China and the US will have a deal done, let's say within the next 2 weeks. That's a bit aggressive. I already regret saying that. But I'm going to stick by it. So 2 weeks from now, at the latest, we will have a China-US deal. Put it on your calendar and light up the comments and tell me how wrong I was if I was wrong. So we'll see how that goes. All right, moving on. We did get a policy update on self-driving vehicles. So this is kind of interesting. And maybe a bit of a lift for Tesla. According to the Financial Times, U.S. to loosen rules on self-driving vehicles, criticized by Elon Musk. This is interesting. The Trump administration will make it easier to deploy self-driving cars on U.S. roads and loosen crash reporting requirements. Well, that doesn't sound great. The most significant changes yet to federal rules on autonomous vehicles, championed by Tesla chief executive Elon Musk. This administration, quote, this administration understands that we are in a race with China to out-innovate, and the stakes couldn't be higher, said a U.S. Transportation Secretary Sean Duffy on Thursday. Our new framework will slash red tape and move us closer to a single national standard that spurs innovation and prioritizes safety. Well, when you're removing or loosening, I should say, crash reporting requirements, that doesn't really sound safe, but we'll see where it goes. So this is interesting. There's been a lot of red tape on some of the self-driving vehicles, the innovations going on there. And so basically the administration is loosening that red tape, and this is going to benefit the entire automotive industry. And I would imagine in particular, most notable, for investors and traders, Tesla, the hot stock, the hot company. Elon's been in the news. And so as rumors continue to spread that he is, essentially taking a step back at some point from Doge, that in conjunction with the red tape getting lifted on, self-driving vehicles is very interesting indeed, and something that I think is definitely worth paying attention to. Speaking of Tesla, let's just do a quick check-in on Tesla on the charts here. So if you recall, I mentioned last episode I was not going to touch it until after earnings. Well, we got earnings, and now we're kind of at a point where, along with the market, it's putting in higher lows. And on a very, very short-term basis, for those on YouTube, as you can tell here, there is this, what I've drawn here, just kind of like a descending line of resistance. And so I'm speculating that Tesla, given some of the recent bullish market environment that we've been in, I think Tesla is in fact going to break out to the upside above this trend line and catch some momentum. We have the 50-day moving average at 271, 200-day moving average at 291. And so I'm expecting some short-term bullish action on Tesla. So we'll see if that actually plays out. I have some calls for Tesla I'm swinging into tomorrow. So we'll see how that goes. But especially with this news on, the red tape being lifted by the administration, that's bullish for the company in my opinion. So, all right, moving on. Let's do a quick check-in on the economic calendar. We only have one day left in the week. And what we have at 10 a.m. Michigan, 1-year inflation expectations for April will be coming out. Basically, the previous number for this, let me see here, was 5%, and the median forecast is 6.7%. So 1-year inflation expectations are expected to go up. It's kind of interesting to me, given that we've had lower CPI reports trending in the right direction with inflation lowering, but the expectation for the course of the year is still higher. So that comes out at 10 a.m. Michigan 5-year inflation expectations, 4.1, previous expected 4.4, slight uptick there. In consumer expectations for April, consumer sentiment for April as well, and that all comes out basically 10 a.m. Beyond that, that's really about it. If you care about oil, you get U.S. Baker Hughes oil rig count coming out at 1 p.m., but that's about it for the economic calendar for tomorrow. So be on the lookout for that at 10 a.m. And that kind of leads me into our last segment here. So one of the things I wanted to touch on, right? This is obviously a market show for degenerates, those who love to trade, 0 data expiration calls and puts. And that's great. I love doing that too. Plan the trade the plan. That's all great. But we are also a show for the more conservative swing trader and investor. And so with that, I wanted to set the stage for an ongoing series that I'm going to be starting on value investing. And this has been the bedrock of Warren Buffett's entire career. Arguably one of the greatest investors that we've seen. And basically, that's what put me on to his style, right? I looked at Warren Buffett and I said, hey, you know what? This is a guy who knows what he's doing. Let me just do a quick Google search here and see how did he come to these conclusions? How did he come to this idea that this is how he should play the stock market? And I came across a book called The Intelligent Investor. For those of you who don't know, The Intelligent Investor is written by Benjamin Graham. It's a foundational book on value investing, emphasizing the importance of discipline, long-term approach to investing. Graham introduced key concepts like Mr. Market, a metaphor for market volatility, and the margin of safety, which encourages buying securities at a significant discount, relative to basically their price. He distinguishes between the defensive investor, someone who basically prefers a passive, low risk strategy. This would be somebody who maybe buys, let's say, ETFs, right? Versus something he would call an enterprising investor, someone who seeks greater returns through careful analysis and stock selection. So overall, the book promotes rational decision making, patience, and emotional control as the keys to successful investing. The Intelligent Investor, it's a great book. I'm currently reading the latest revised edition of it, about 3/4 of the way through on it. It's an excellent read if you are interested in investing. It's pretty dense, I'm not going to lie, so fair warning there. But if you want to dig into really the bedrock of what Warren Buffett has been doing for all these decades, it's like look nowhere else, right? This is the book. Benjamin Graham was an economics professor, I believe back in like the 30s, 40s. So they've done a ton of revisions on the book because originally he recommended investing in industrial stocks, utilities, because tech really wasn't a thing in his time. So obviously they've had to do revisions of that. So anyways, all that to say, we're going to start a new series, a mini series on The Intelligent Investor. I've done the legwork and already read it for you, and I'll bring you essentially the cliff notes here. And so, if you have any particular questions on the book or value investing, feel free to drop a comment. Would love to get your take on it. But basically what I've done is taken the enterprising investor idea from Benjamin Graham, someone who wants a bit more returns from their investments, and fed it into ChatGPT, some of the practical requirements that Benjamin Graham is looking for in these stocks, and basically broke it down for each sector in the S&P 500, as well as a value equation for intrinsic value. What is the stock worth versus what is it trading at? That is the margin of safety that I was referring to, right? That's what Benjamin Graham talks about. He only buys stocks that have a margin of safety. So if the intrinsic value of a company is 100 and it's trading at 60, that's 40% margin of safety. That's something that Benjamin Graham, hypothetically would invest in. So anyways, I've basically spent too many hours to count putting together all this information as far as the different criteria that you should be looking for the different sectors. If that's something you're interested in, it's in a Google sheet. I'm more than happy to share it. But again, I just want to go through a mini series, just essentially breaking down some of the finer pieces of the book and what he talks about. So we will get into that here in the next couple episodes. And if you like what we're bringing here on Stoncast, please remember to like and subscribe, leave a comment. Where do you think we are headed? Hey, I already put out my prediction as far as China-US negotiations. I'm giving it 2 weeks. Yeah, it's a bit aggressive, but I'm sticking with it. What about you? What's your prediction? Are we going to get a deal done? Who's going to back out first? Who's going to cave in? Let me know what you're thinking. We'll be back again on Sunday to see basically how Friday shaped up and what we should be looking for heading into yet again another volatile week next week. Thanks as always, and please remember, plan the trade and trade the plan. Have a good night, everyone.